All right, so welcome back again. We'll be dealing with, what is liquidity when it comes to the forex market. As you can see now, this is actually, one of those fundamental course for, trading forex profitably, as you can see right here. And that is what we're actually just dealing with today. So we're going to be talking about what really is liquidity when it comes to, you know, um, your trading chart and all of that, how to read liquidity, what it entails and all of that. So liquidity in itself, it's in forex refers to how easily and quickly a currency pair can be bought or sold the market without causing any significant change in its price. Yes, that's what we're dealing with. We're talking about the rate at which a currency pair is bought and sold within the market, the forex market, not really causing any significance in terms of price change. Now, from this, you can see what it looks like. Now, this is just a sharp, representation of what a liquidity has to looks like. Now, when you talk about liquidity, according to a particular chart or this chart, as you can see right here, you must talk about structures when it comes to liquidity. We have the demand structure, we have which your supply bound, your resistance and all of that, which is very important. So briefly, that is what it looks like. Now this is just, as you can see right here, you have the price making higher highs and higher lows and all of that. Now all of those region of higher highs and higher lows forming your zones, those points are the liquidity levels, as you can see right here, because it is telling you that there is going to be a retracement of price, either in a bearish form or in a bullish form. That is simply what it looks like. And as you can see right here, we have the demand zone and you also have your supply zone, as you can see right here. Now all of this zone where you have these arrows indicating here, they are actually giving us the significancy that is attached to the your liquidity as concerning that particular trend level. So you must understand a particular trend level and understand when that particular trend level is heading for liquidity. That becomes a the point in which you stake your trade at the time. Now this is also another one, as you can see right here. We also have a liquidity gap, as you can see right here. We are well represented in this image. As you're seeing right up now, you have the liquidity gap, you have the liquidity range. Those liquidity range becomes your zones. So these are very important because at each of the zones, that is where price prepares to take off to the next level. Now let's look at when liquidity is high. What are the implications? First off is that trades are executed instantly. Yes, the price movement is smooth, then spread are tight. Meaning when spread are tight, we're talking about low cost. It means when you're trading, because of a tight spread, you have low cost. So all of those um fluctuations within the market space on that particular currency pair is not really going to affect you negatively. That's what it means. But when you have a very low liquidity level, trade may execute slowly. When you also have price can jump unexpectedly, and then the spread becomes widened. Yes, you tend to have lots and lots of all of lot when it comes to candlestick representation. You tend to have lots of wicks in that particular you know um market currency pair. So basically this is what it looks like. Now let's look at why liquidity is important in forex market. First thing is that when it comes to tighter spread, high liquidity currency pairs like euro, USD and the rest of them have very small spread, very small spread. We also talk about fast order execution. We also talk about more reliable price action, and we also talk about better risk management when it comes to the importance of liquidity. Now high liquidity versus low liquidity currency pair. Now importance of it is that it brings, these are some of the pairs you need to look at for when you see all of these pairs like the euro USD, you're talking about a very high liquidity pair. These are major pairs. Then when you talk about the USD and NGN, talking about the Nigeria US dollar to Nigeria, the naira, then you are having lots all of this low liquidity pair. Now let's talk about liquidity and forex trading section. Now liquidity varies throughout the day. These are things we need to know, because when it comes to trading, trading has different times in which different time zone in which you could go ahead and stake your trade, and you don't need to trade at all time as a very profitable trader. Now these are some of the times. New York time is there. We also have London time, very important, and these are things that we need. So we also have Asian time. Yes, the market begins with Asia, and then it transcends to London time, and then it gets to New York as well. Now let's look at liquidity and forex trading section. All right, now I talked about this in a jiffy quite previously, and I told us about the three sections that are in vogue when it comes to trading in itself. And it is very important. You don't necessarily need to trade in all the time zone. You just pick a convenient time zone that is okay for you, based on your level of understanding of the market and trading in its entirety. Then you stake a trade. Now let's look at liquidity versus volatility. These are key differences. Now this has to do with easy trade can be executed when it comes to liquidity, but volatility, how much price moves, that is actually what volatility talks about. Now it is very important because the market fluctuates a lot. So if you don't understand what all of these, then you tend to become a victim of the market. If you don't learn how to wait for the market to be to your favor, the market is going to mess you up. Now read time example. If you place a buy order of Euro USD, it gets filled instantly because thousands of traders are buying and selling at the same time. If you place the same order on exotic pair during a quiet section, the price may jump before the trade is failed. And this is exactly what we're talking about here. Very important. So these are things you need to look into as a trader. Now this is finally on the keynote. Liquidity in forex is the availability of buyers and sellers selling in the market. Now the higher the market, or the higher the liquidity, the safer, cheaper and smoother the trading experience. So this is what you need to understand. All right, so if you're tuning in for the first time, don't forget to hit the subscribe button and turn on the notification bell so you will be notified whenever it is we come up with a new video for you.